All right, ladies and gentlemen, welcome back to the session. We are now tackling section cycle CPD 1.6 in this video. So what we have done so far was to deal with cycle 1.2 CPD. Then we went to cycle 1.3 CPT, then we went to 1.4 CPT, and then we went to cycle 1.5 CPT. And today we're gonna go to cycle 1.6 CPT, which is gonna tell us more about the financial statements. Remember what we said in cycle 1.6, 1.5 CPD, that the two last items that were not presented there was the financial statements and volume 8. So we're going to deal with financial statements here, because financial statements are really the ultimate goal of what we're trying to do here. So that's what we are envisaging. So financial statements are our ultimate product. But we don't just go through financial statements. I'm sure you have noticed that there is a process that we are following in getting through the financial statement. So, and we have tried to show you that in cycle 1.5 CPT. And as we go forward now, things are gonna really get messy. But fortunately, SPPSA is here to take you through that. So 1.6 is the last cycle CPT. Then we're gonna go to phase 2 because phase 1 is cycle 1. All right. So phase 2 that we're gonna start after 1.6 CPT, it's gonna be phase 2. All right, so this section is gonna be cycle 2 point something CPT. So in that session, we're gonna deal with volume 7. It has been confirmed, users of financial statements or business stakeholders. So chapter 1 is gonna deal with shareholders or investors. For me, I think they should have included lenders and borrowers of capital here, so that it's one and the same thing, but sometimes it's difficult to separate shareholders, investors and lenders. All right, then we're gonna deal with directors of the company and management. Then the problem comes when the shareholders are also directors and when the directors are also shareholders, so information would normally get messy there. Then suppliers of the business, we'll talk about those who are the suppliers of the business. Then we'll talk about the customers, your customers and buyers. What information do they want from you? I'm going to tell you a story from there. Then employees, sometimes it's always tricky to put employees separately. Sometimes always nice to put employees as part of suppliers there. Then you've got government. Government also, it's always nice to add government employees and suppliers in one basket. Then we'll go to competitors. All right, rating agencies. Rating agencies, I love it when they are included shareholders, lenders of the business. Then we're gonna go to community and labor unions. I don't think labor unions have got a separate information they want opposed to what the employees would want. So I think these two chapters can be combined together. But of course, there's enough time to deal with that. Then we'll see how that goes. Then we go to phase 3 CPT, where we're gonna go to volume 6. We're gonna deal with chapter 1 and chapter 2. That is business ideas and forms of ownership. I was told that phase 4 is volume 11. That is the restricted business laws. All right, let's get to it then. All right, what we're expecting here in this phase, cycle 1 CPD, we're going to look on the financial statements. So there are a number of parts. So part 1 of the presentation is generic information that will be covering the cover page of the financial statements. We're going to talk a little bit about that. Then the table of contents, we're going to talk about that. We're going to talk about general information. All right. Then we go to the next part of part 1, where we'll be talking about small business practitioners. We'll be talking about financial records, clerks, and we'll be talking about the chartered accountant, and we'll talk about the secretary. This is a sensitive issue. We are not expecting that everybody will have a secretary, but if there is a chartered accountant there, because this is a small business, if there's a chartered accountant there, the secretarial work should be much easier. So the chartered accountant will also be doing work of the secretary there. Then also in part 1, we'll be dealing with assurance, where we'll be dealing with registered auditors. We'll also be dealing with psychologists. It's a new report, this one, for psychologists that were included, because we have realized that our people are really stretched out psychologically, and they need a psychological advice. And as stressful as it is, small businesses really need some psychological attention. Then also we've got what we call small business valuers. There's something new there that we're introducing at SBPSA. Then we'll talk about part 2 of the presentation, where we'll be talking about chartered accountants' opinion about the financial statements that they were preparing. Then we're going to deal with director's responsibility. I suppose also director's report will also be there as well. Okay. Then we'll talk about secretary the report as well, and so forth. Then we'll be talking about the taxation overview. You will remember when we were doing cycle 1.5 CPD, we said there that there are rules and laws of determining taxes, and of course we're going to deal with that even at volume 6, because it's quite a concrete issue that we need to deal about. Then we're going to talk about the financial statements there. All right. Now, if we look on the financial statements, SPPSA has included a number of important and essential things, in my belief, that will really move South Africa forward if they are taken into account. Well, our members have got no choice but to apply our standard guidelines, because we really want to produce adequate small business manager. We just want to change the environment and professionalize it, and by so doing, it helps us now to do things better and to do things in a very different way, and if things are different, it makes us then be able to compare between a member who is not a small business practitioner and a member who is a small business practitioner. Okay, on page 1, don't worry about the number of pages. That is 60 pages. We're going to cover that very well. So if you look on the first page of the financial statements, you will see that there is an accounting period, 29 February 2024. That is the year of the business. Remember, this business, Ndulini, has got a year end of 1 March each year, and ends on the last day of February. That information is included there. So when they say with comparatives, it says that it means that we've got 2024 and 2023. We will find them in this one set of financial statements. I remember when one of the clients asked me to do financial statements for his business in one of the days. He wanted to do 2021 and 2022 financial statements. Then he asked me to deliver these financial statements to a certain bank. Then we did that, and we produced one set of financial statements with comparatives. And when we got to the bank, the receptionist there said, "Where is 2021 and where is 2022?" I said, "They are both here." And she said, "Never. That can never happen." And it was a long story, and we almost spent 4 hours trying to convince her that you can include 2 sets of financial statement in one report. So that is why it is important that people who are sitting at the receptionist, who are receiving important documents, they are quite aware and they are adequately trained about what type of documents that they ought to receive. All right, then the name of the business is given there, Ndolini Pty Ltd. This is the company that is producing the financial statements, unaudited and non-independently reviewed annual financial statements. So these financial statements have not been audited and there is no independent review. So you are already telling the users that you won't find an auditor's opinion or an independent reviewer's opinion. And this is a company, so the financial statements are done in compliance with the Companies Act. This is why at SPPSA we say the financial statements are the responsibility of the chartered accountant, because a chartered accountant is someone who has went through all these important legislative processes. So the chartered accountant would know what it means when we say the financial statements comply with the Companies Act. So if you are the member of SPPSA, you need to include this stamp in the front page of your financial statements. And this stamp states that Ndolini Pty Ltd is an associate fellow of SPPSA with a membership number M2024412724. So this is an SPO. This company has registered as an SPO with us, is getting continuous guidance, is supported on how to present the information fairly and how to professionalize the environment and how to do things better as compared to other people. And of course, a website is given there, www.sppsa.org. So as we already mentioned, that these financial statements are for 2 years, because we already stated that these financial statements are coming with comparatives. Okay, table of contents. Table of contents, we've already dealt with it when we're dealing with the schedule of the presentation there, but there's no harm in repeating it. It has got part A, part B, part C, part D, part E, part F, part G, and part H. Part H, we dealt with it when we were dealing with cycle 1.4 CPD, because cycle 1.4 CPD was talking about the combined reporting assurance, where it wanted us to provide more information about the figures that we're gonna deal with there. All right. Okay, so it's very important that when you are dealing with financial statements, you also have your car with you. All right. Okay, and part H continues from there as well. I think of what's important here is that I like this part of government spending and government age analysis, because there what SPPSA is saying if you're doing business with government, tell us which departments you are dealing with so that we can understand which departments are not paying the businesses on time. All right, and remember, the future of these businesses depends on government paying on time, because most of the business are doing business with government there. All right, so generic information, what do we get here? All right, on the top of the financial statements, we've already mentioned that these are 2024, 2025, although I think there's a mistake that they should be 2024, 2023 financial statements. Already we've been told that they are unaudited and they are non-independently reviewed. So we'll get that throughout the financial statements. It's just to make sure that the user is not making a mistake that the financial statements are not audited in one way or another. Okay, then we've got Ndulini Pty Ltd. Then we've got the company registration number of this institution, so that these two match together. All right. Then where was the company incorporated? This is a South African company, hence it complies with the Companies Act in totality. A small change here, Ndulini is reflected as in health and safety, but in our previous discussion, it was reflected as a medical practice nature of the business there. What is the registration number of the company? Because remember, as you will see in volume 11, that the company, once it has been registered, it starts to exist and it needs to have a place of a registered office where it is where it can be found, and the business registration address. All right, so those are the that is the registration office and the business registration address. Then the director's cell phone number. There is the director's cell phone number in case you want to get hold of the director as fast as possible. Then that is the company's email address there. All right. The email address of the company is quite very important. All right. And we're gonna have a session in one of the volumes where we'll be talking about, because I've realized that at small business there's a lot of money that is lost on the emails. Okay, we're gonna talk about that in trying to recoup or to change the emails into money. There is an email address. The number of directors, it's one. Maybe it's Mr. Ndulini. All right. Small business practitioners details is Mr. Velelo Maxwell Ndulini. He stays at number 37 Maduna Crescent, Phase 1, Ngambedlana Umtata 5100. Okay, this guy is registered with us as an SPP. All right, here is the registration number. The business itself is registered as an SBO. Okay, here is the registration number. Okay, SBO registration number, small business operation. Okay, then Mr. Ndulini in Ndulini Pty Ltd, he becomes a business practitioner. He needs to register with us as well. Company secretaries is the firm of chartered accountants. Here are the details of the chartered accountant. There is no specific secretariat company that has been employed, so they also employed the director of the chartered accountants there. So if you have employed the firm of chartered accountants as a firm to do your books or your financial statements, you must also indicate the name of the person who is responsible for your entity. There is that person. So here are the bankers of Mr. Ndulini, of Ndulini Pty Ltd. Fortunately, he has got a legal representative for the business, and he has got auditors for the company. Don't confuse this. You might still appoint auditors, all right, but not have financial statements audited, all right. So don't confuse the two. Don't confuse the fact that there is an auditing company here, but the financial statements are not audited. It's possible, all right. Individual auditor in charge is an example. Then there is a financial records clerk, and the financial records clerk is mentioned there with an SPP as a number. All right, because remember, we are having a triangulation at SPP SA. We are saying the business owner must be assisted. If it's possible for the business owner to employ, if the business has been accredited, he can employ an SPP trainee. Then there's gonna be a financial records clerk trainee. Then there's gonna be a chartered accountant. So it's possible that there can be a qualified financial records clerk and a financial records a clerk trainee, depending on the size of the business. Of course, that is coming with some costs over there. I think I'm forgetting something. I wanted to say something over here, but I don't remember what that was. Okay, SPP trainee, there it is. It has been also included, and there is no training number. Because we only issue at SPPSA the registration only to the qualified SPP or a qualified FRC. Then a small business valuer, the person who have valued how much this business is worth, that person is given. And I think SPPSA does not give a membership number there. I don't know why they are doing that. Maybe there is a membership number only that it was not included here. Business management. Here is the small business practitioner. This should be Mr. Ndulini, because this is a specimen. All right. Here is Mr. Ndulini. So the users of financial statements get to know about who Mr. Ndulini is now. They are reading about him. Here we can see. So you just write. The chartered accountant will help you to write your profile. All right. To say what must be returned for you, for the users, because these financial statements are going to be sent to various people, or they are going to be accessed by a number of people, and who want to know more about you as well. All right, so that is the information that has been given there about the owner of the business. It's quite a qualified person there. Then, of course, if you want to know that the figures of the financial statements have been well taken care of, we need to include, that's what SPPSA now is doing, we need to include some background information about the financial records clerk as well. And we gave some information about who this person is, what are the qualifications, where the person has trained, and what is the experience of this person, what is the forward of this person, where is this person looking into the future. Here is a chartered accountant, Boiti, and here Boiti is really also doing the same things. He's got MCOM from Wits University, and so we get to know also the experience of the chartered accountant. We know chartered accountants are well trained in all those things, but they also develop themselves further. Look at this one. He also holds an MBA from Oxford with Kamlud and a master's from Witwatersrand University, and she trained from KPMG and so forth. So you can see that SPPSA really want to make sure that the chartered accountants at their businesses, they really enhances the credibility of the financial statements. So really SPPSA trying to set itself apart from the rest of the group there. So we are producing information that is meaningful. So if there is also a secretary, we write it there. If the secretary and the chartered accountant are one and the same person, we're gonna state it here that chartered accountant and secretary of the business. So that information is gonna be included there. But if that information is different, then we're gonna do that. If the financial statements are audited, we're gonna include this information about the auditors. So we're gonna know more about the auditors. You must remember that auditors must not be the same, and with SPPSA, the auditor who audits the financial information is not the same person who prepares the financial information. All right. Okay, I remembered what I wanted to say here on this page. So I just want you to, what SPPSA is doing here with the small business valuers, we've got this group of small businesses really doing well, and they are scattered throughout the country, but their owners don't know what their business are worth, and sometimes even if they want to sell them, they don't know where to go for a price to be included in that business. All right. Remember, we should mention to you now that when you start a business, you are making an investment. In other words, from an option of investments that are available to you, you have chosen to have a small business. So we need to understand whether the business is growing or the business is dying. And the best person who should do that is a small business valuer. All right. So most businesses don't have a small business valuer. This is the person who's going to determine how much is the price for a share, whether the business is a going concern, the person who's going to determine the impairments, if there are any in the business, and then all of that is going to put a price in the business. That's what I wanted to ensure. So these are the new things that SPPSA have thought that must be included as part of value enhancing towards small business. Really, you could see there that SPPSA is trying by all means to give value to these small businesses there. In other words, they are trying to appreciate the work that is done by small businesses, and they are just closing all the gaps for the realization of small business enterprises. There is the psychologist. This is the person who's going to give a psychological report about the state of affairs of the small business practitioner, whether he has met with the small business practitioner, what in his or her number of clients, what is the dominant problem, where are the small businesses suffering, what is the common cause, and what is the common treatment, so that at least we understand when we invest in this business that at a small business level, these are the psychological risks that are there. And of course, the qualifications of that psychologist are there. It's quite a new report that we're introducing there for psychological reports and for small business valuers. And of course, the valuer is going to tell us how he got to the value of the business. And I want to report here in this cycle 1.6 that sometimes there is going to be a glitch because when you're valuing a business to sell it, it's sometimes different when you're valuing a business to buy it. Okay, so there is that small gap that needs to be managed there to arrive at an acceptable price. But what is nice is that the really competent people are doing that and so forth. I understand that part of the valuation might want financial business statements to be available upfront, and some people don't want that to happen. So the valuer is going to be doing that, and this information must be understood with the fact that we are requesting all our small business operations to register with us for share certificates. Then once you register for share certificates, we're gonna and do your share certificate with us, we're gonna give you a valuer who's gonna come and value your business. I just want to say this here, that if you've got 50,000 rand, you've got a choice of taking this 50,000 rand and chow it, and you are left with nothing. You've got a choice of taking this 50,000 rand and start a business. Then when you're starting a business, you hope that your business is going to make profit and it's going to grow and it's going to sustain you. All right. Hence, you need a valuer who's going to tell you if the business is doing that. Then you can take the 50,000 rand and put it in the bank and say, bank, I want to leave this 50,000 rand here in my bank account. Then the bank is going to give you an interest. Remember when we were dealing with CPD, cycles 1.5 CPD, we said you can also include other income. So the interest that is coming on the positive money that you put in the bank is called interest. But sometimes that interest is very small and it doesn't feel like an investment. And it's always tempting to use the amount that is ready in your bank account. Okay? Or you may take that 50,000 rand and start a block of flats. You can take that and hope that the people who would use your flats will pay you rent. And that rent, after you have done your discounted cash flow and after you have done your payback period, it's become your return. All right. Of course, your return, you need to calculate your return because it needs to be after expenses. All right. Then that is a business. You could still take this 50,000 rand and buy shares somewhere else, and the dividends that you get, then that is your return. So these are all returns, all right? And there is a way of valuing all these returns. But what is missing is to have a method of valuing small businesses, and that is what we're trying to do, all right? When people get into business, they must understand what they are getting into, and how their hopes are measured. So that's what we're trying to bring there, so that at least you are comfortable whether you are making progress or you are not making progress. Then we've got executive reports. With the first executive report is the report of the chartered accountant that will tell us about what he has done. Mainly, he will tell us that he has done the financial statements for the business. Those financial statements include profit and loss, the income statement of profit and loss, the changes in equity, the statement of changes in of cash flows, and the notes. That's what he will, and he will tell us how did he comply with that. Of course, and he gives nice details there, the qualifications of a chartered accountant, who would have known about those qualifications even when the chartered accountant was exposed on top there, as we have seen. Okay, but we're getting more information now. The SICA registration number, the site number, the SARS number, the practice number of the office. Okay, the registration number of the company in which this person is representing there, and so forth, and the type of services that they are doing in their business. There, I can see in this one that there is no valuers services that have been included. There maybe it's an omission. Okay, that is a continuation of that report. There, look what the chartered accountant is saying there. He's saying we are not required by law and the international standards on auditing to verify the accuracy or completeness of information. SPPSE is stopping that. Is saying at least try your maximum best to make sure that the information that is included here is accurate. And what we have done to supplement that statement, we've introduced the combined reporting template there for you to do it. Then he puts a date in which he did that, and he stamps the financial information. All right. Then here is director's responsibility. I know that in my office, we have seen that 1 out of 50 small businesses understand what director's responsibility is, and we're dealing with this director's responsibility in volume 11. All right, so we deal with it nicely there, and we are making sure that it comes out as a solid product at the end. Okay, so that is the director's responsibility. Although you will find that directors have signed the financial statements, but they are unaware about this. And if anything goes wrong in this company, the first thing the court will do, they will pull out this document and they will read it to you. And if you don't understand any of these things, or you've got no recollection of whether these things have happened or not, then you are in for jams. So that's what we're trying to solve at SPPSA. Then we are dealing with this at volume 11. We're helping you there to understand. And of course, if there are any problems with this one, they are going to be addressed in the combined reporting document. Then you sign, then you include your address. This address must be the same as the address that was included in the cover page. Okay, then of course, as we expected, after the director's report, we deal with the director's report. Okay, the director's report has got specific information. All right, it tells us about what the industry is. Okay, it tells us about the going concern, and this going concern will be verified or will be cross-referenced with the information which that SPPSA now wants to be produced by the small business valuer. All right, then it tells us the number of directors and their names, and number 4, it tells us about the borrowing and limitations. Can the business borrow money from somewhere else? Does the MOI allows the business to borrow money? All right, yes. I think here it should have said shareholders. Okay, it must not repeat itself there. Then it's telling us that the secretaries are also the accountants of the business, which is fine. The director's interest in terms of Section 76 and Section 79 of the Companies Act is dealt with here. Are there any significant events that happened after the reporting date that might that might influence the reading of the financial statements that have been reported at year end. For instance, if you prepare your financial statements hoping that your business is going to continue, you report your financial statements on the 28th of February and say, everything was fine. But on the 30th of November, on the 30th of January, it is you realize that government is saying to you did not comply with laws that were important to your business in the year you have just passed, and they are going to fine you 100 million or 100,000 or whatever the case may be, then you're going to include that information here so that we know how that 100 million changes the information that you've already produced, even though you are coming with this information after the financial statements have been signed. Okay, financial statements, annual financial statements. So SPPSA is saying annual financial statements must provide an accounting period in which they are prepared, and also if there are any interim financial statements, they must be for 2 months. For 2 biannuals. In other words, you must prepare interim financial statements. For instance, this company, his year end ends on the 28th of February. So in August, they must prepare annual interim financial statements, and then at year end, they prepare full annual financial statements. Then here, we're told that Kunoka Chartered Accountants were also appointed as secretaries of the business. So that is basically the report that is there. Then the secretary will give information about how the company has complied with the financial statements. With the laws that are available there. So far, they are only talking about 3 laws. They are talking about CIPC, they are talking about SARS, they are talking about Department of Labor, and nothing else that has been talked about there. Of course, with the introduction of SPPSA, we are hoping that the secretarial report will include more other laws and more pertinent information about how the business is complying, because we at SPPSA were saying, let us stop this thing of getting into business and we're not trained and we're not developed into what business is, what business is capable of, and what a business cannot do, and that's what we're trying to do. So we're hoping that we're gonna expand this number of laws and include some of the information in this part which relates to laws, because the combined reporting template or the combined reporting assurance will not be able to accommodate that, because it's already accommodating quite a number of information in terms of the financial statements. All right. Then we get to reports. The first report is taxation. You will go through this by yourself. But what we're saying here, we're saying in South Africa there are 5 ways in which a tax is considered. It's either you are a personal service provider, and if you are a personal service provider, you need to read from here and see for yourself if you are really a personal service provider. All right, up until there. Then if you want to do your taxes using a turnover tax, then you're gonna use this part. Then if turnover tax is not working, you're gonna test yourself as a labor broker. If that one is not working, then you're gonna, as a final step, be a small business corporation in terms of Section 12E of the income tax. That is now a tax overview which needs to be tested. Okay, we test it here so that everyone who is looking at your financial statements understand what type of taxes are affecting you, how those taxes are affecting you, and the determination of that of those steps in terms of how they affect you. The last is the corporate taxes, that is a straight 28% there. So there are no tables. Then here we show the calculation. Once we've decided which method of taxation must be applied. Here, we will see this when we are dealing with it also in volume 6. Then we do the calculation of tax here to show how we are getting to the taxation that we're going to report to our financial statements. And also, this is going to help you even after you've filed your return. After you've filed your return and SARS has assessed you, you can come back here and see how this was changed by SARS and the reasons for that, so that by next year you are able to predict your taxes quite accurately. And that's where we are putting value at SPPSA. We're saying, in as much as you are doing business, if you are not trying to understand your business and trying to improve and identifying the areas of improvement, then that business is doomed to die. And we don't want that. We want all the business that are small today, at least after 5 years, they go to be medium businesses. And we want you to understand every aspect of the business by continuously being trained by us. All right, financial statements. Here are the financial statements. That's why we're saying financial statements must be produced by the chartered accountant, okay? Because the chartered accountant is somebody who has went through quite an extensive training and has passed really difficult exams. So that person will understand what we mean by basis of preparation and the accounting policies themselves, how to design the accounting policies and taxation, what form of accounting policies are around taxation. For assets, what do we mean by accounting estimates? All right, how do we mean about useful lives of the assets? How do we deal with bank and loans and overdraft? What is meant by financial instruments? Thinking about loans and receivables as financial instruments. What is a non-derivable financial liability? What is a trade and other receivable? Is trade and other receivable a financial instrument? What about staff receivables? Are those also financial instruments? Cash and cash, is that a financial instrument? Also trade and other payables, are those financial instruments? When do we have provisions? Okay, because we also don't want you to have accounting policies for items that we won't find on the main financial statements. Then he says critical accounting estimates and judgments. Okay, I want us to go back here and find out if these financial statements are prepared in terms of he says that these financial statements have been prepared in accordance with the International Financial Reporting Standards for Small Business and Medium-Sized Entities. Is this true? That's what we're trying to find out. Is this true? And if it's not true, how do we know? And if it's true, how do we know? And why? The only thing that is missing here, why is this accountant choosing to apply an IFRS for SMMEs, not applying the full IFRS? Okay, and what law authorizes this person to comply with IFRS? Okay, and which section of that law authorizes that to happen? Really, you can see that SPPSA is making business out of business sense in terms of moving small businesses forward. Okay, shareholders equity. Okay, interest. What is interest in shareholders equity? All right, then here are the figures. So already we know that when we're reading these figures, we can more or less tell the accounting policies that have been used and the professional judgments the chartered accountants have used. So what normally happens is that our training is set up in a situation where we say let us train the small business practitioner. Let us find help by introducing the financial records clerk, who's gonna be the intermediary between the small business practitioner and the chartered accountant. All right, then the ultimate responsibility for the business rests with the small business practitioner, but is getting assistance. Okay, the financial records clerk gathers the information and helps the small business practitioner to do that. Okay, then once the information has been gathered and packaged nicely, the information is given to the chartered accountant, who then lays out in the financial statements using the International Financial Reporting Standards. Okay, so we know now here that, okay, here are the expenses, and we already understand what went to these expenses in terms of information gathering, the thought process, and the organization. All right, bank charges. Okay, this is quite a big institution. Look at the value of the bank charges there. Okay, personnel costs, they have been classified into three. Personal costs include the following: salaries and salaries paid to employees. All right, I think also not only salaries paid to employees, also accruals, amounts that have not paid. What is an accrual? If I get to business with you and you employ me as your employee, and you say you're gonna pay me 5,000 rand a month, that is a contract of employment. I want my 5,000 rand. But it's possible that the business might not have the 5,000 rand. Okay, it might have 4,000. Okay, so here we're not recording 4,000 rand, we're recording 5,000 rand, because that money must still be paid to me, even if it's after 6 months. That month is for me, that money is for me, and it was incurred in this month. Okay, all right, so that is an accrual. Okay, contribution paid to UIF, we've got a way of calculating that as well, and we need to understand it like that. Then we've got amounts to COIDA amounts. We've got a way of calculating it, and those are also included as employee cost as well. But we do separate between personal cost and directors remuneration. Sorry for that, I think I forgot to close my window. That's what is interrupting me, otherwise I will close it later on. Okay, then we've got profit and loss. Profit and loss, we take this amount as it is from the financial statements. Revenue, we already talked about revenue, account 1000 from our account identification, and we include it here. All right, and remember, on our accounting policies, we've already mentioned how we're gonna determine our revenue. But whatever we do, we will see when we're doing with chapter 7, I suspect on volume 6, when we're dealing with VAT. Okay, VAT has got a very big influence on what is recorded here. Okay, so one of the things that we need to understand when we are recording financial statements, we need to understand whether the entity's value is a VAT vendor or not. Okay, so you will see that we are talking about that when we are talking about revenue, but it's not only relevant to revenue, it's also relevant also to the expenses as well. Share capital, so they are only 100 shares here. That is one of the problems that we have at small business, because when this business is sold with the share capital of 100 rands, it's likely to pay tax, because it has got a very low tax base, because at 100 shares and you are starting a small business, it's unlikely that you might buy each share by 1 million, for instance, or by 2 million. Chances are you will buy each share by 100 rand, for instance, and so forth. And as in as much as you are buying shares for your business, you are also making it very difficult for you to sell it in terms of income taxes, because your tax base will be very small for that. So those are the things that we need to take into account when we advise our people. But even though those advices are important, but cash is not always there to curb those problems when they happen in the future. Then the chartered accountants have reclassified the expenses, and they said under administrative cost, water and electricity, computer expenses, telephone, he's gonna include those as administrative costs. That is the skill that is required here to do that as well. So, and not anyone can just do that. Property, plant and equipment, we have read the financial accounting policies there, and that information has been taken into account. So we know in this entity that there are only vehicles and office equipment. There is no other type of an asset here. So we're given comparatives, we're given 2021, and we're given 2022, and we're given 2023. Okay, so it's a rolling forward information there. You can see that there is enough information for users to make up their minds, including the business owners as well. Wow, these guys are registered for VAT. We can see that there is information for VAT. So they are owing SARS, because this is a VAT liability, they are owing SARS an amount of a 1,800,000 there, all right, and so forth. So this 1,800,000 is a difference between what has been sold and what has been paid for, all right. And here is information about cash flow that will go to the cash flow statement. Cash and cash equivalents, they are included there, but I don't see any petty cash there, all right. Otherwise, petty cash is an amount that should have been there, all right. Trade and other payables, we've already talked about it, how much you owe to your creditors, all right. Retained earnings, we've been talking about this a lot, all right. It's here, what is important is whether the business is doing a loss or is making a profit. Then you come to your balance sheet, okay. Then there's of course this is a specimen, so we need not to analyze to the finer detail, because we can see now here the assets 113, but when you look on the depreciation, you can see on the depreciation that the asset were a lot more than that. For instance, here you can see that the closing balance of the asset is 3,000 and here it's 1,000. So we can tell that really SPPSA is just giving us a specimen there. Yeah, but if you look on the liabilities, really you can see that when we're going to use the same financial statements when we are dealing with volume 7, where we'll be analyzing the financial statements for purposes of understanding the user requirements there. Here is the income statement. The company made a profit of 360,000, and they need to pay 100,000 to SARS in 2024, and they need to pay 134,000 to SARS in 2023. These are really problems that we need to deal with, all right, fairly in advance, because you can't tell your client at year end that he must pop up 107,000, all right. So there must be some education that you will see as we go on with our studies that must happen there to save our people. Share capital, we already talked about it. Share capital is included in the statement of changes in equity there. Let us test if this information is right. So what happened here is that the opening balance was 437. Let us check here if we can get 437. Yeah, there is 437. So at least SPPSA did not give us totally incorrect numbers there. Here is the detailed income statement. This information, you remember this information, where is it coming from, all right? And you can see now how these accounts have been used to produce the rest of the financial statements. And I know that you remember from cycle 1.5 CPD on how we have used and explained this, and what is the influence of the budget, what is the influence of the transactional log in doing that information there. All right, corporate wellness reports, we already know those reports. One of those reports is coming from the psychologist. Then the going concern statement is coming from the valuer, small business valuer. Then the business government compliance report is coming from the secretary and the chartered accountant there. Then the psychologist report is going to include a report over here. SPPSA combined report, we've already talked about it in cycle 1.3 CPD. And they said, yeah, combined reporting is a product of a combined reporting annexure. In answering the CR, the users report on areas that were answered with a no on the CR report. The combined reporting annexure is answered outside the financial statement by the chartered accountant here in this part, okay? Because when we read this part, then it gives us some sense of what has happened in the financial statement. The aim is to provide users with the entity overview on how what the strategy is to improve, or on what the strategy is to improve the entity's operation. Because if there are no's, it means there must be improvement, and the users want to know what the entity will do to correct those problems there. Then that information is going to be included here. All right. Then after that, the going concern. After that, the chartered accountant is going to make some remarks about his feeling about the business operation. The feeling is always influenced by the professional judgment. Then the small business practitioner is only going to do that, and they both sign the financial statement. The reason here is that we don't want a small business owner who will say he has got no clue. So you can see that as we continue as small business practitioners, the small business is involved, and he has got something to think about, he has got something to correct, he has got something to implement, and to make the business much better. That's what we want there. So we're going to use these financial statements again when we're dealing with phase 2, when we're dealing with the users of financial statements. All right. Ladies and gentlemen, that's it on the financial statements. My name is Holtata Fuzane. Thank you so much for listening. Let us now meet in phase 2. Don't forget to do your tutorials and write your CPD. All right. Good night.